we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, looking at the indexes, sectors, commodities, individual companies in the news, breaking down some charts, giving you guys some context, also some education so that you can learn how to better run your daily routine as a trader. And welcome back, Team Tackle. As always, excited to be here. Friday is one of my favorite days in markets, sets up the weekend, sets up next week, trade management, watch list updating, and we've got Coach Frank and Coach Matt here to kind of break it all down. First off, Matt, how you doing today, sir?
You know, Tim, I'm doing really good, and it's been a tough week for a lot of traders, kind of a nasty swing trading environment, and I woke up and I was like, oh man, nasty week, terrible week for swing traders. And then I started scanning and I was like, oh man, tech looks gross, comms looks gross. And I was just in a bad attitude, just bad mood. Everything was looking gross. And then I got into discretionary and then I got into energy. And for some reason, my mood shifted real quick when I was looking at some of those energy charts. It looks pretty decently for a good little trading environment next week. And so there could be a reprieve coming to us swing traders out there with some decent price action setting up in certain sectors.
So all in all, did you feel good about the scanning then? You found some great opportunities. You like some bulls, some bears, the whole thing?
Oh, absolutely. Absolutely. You know, tech's kind of a gobbled mess. We'll get into that a little bit. Com's a little bit of a gobbled mess as well. But you start getting into some of the discretionary plays. You start getting into energy plays. You start getting into some of the regional banks in the financial areas as well. And you really do start to see a little bit of a theme developing in the charts that are really starting to stabilize. And typically, I mean, kind of going with the Merck news today, we'll give that here in just a moment, but the reopening play looks real next week. And so I'm excited to get into the scouting report meeting later today and get all the coaches' thoughts. But and again, I'm only about 30% into my scanning right now, but there are some charts that really do stand out. And I'm excited to talk about them today.
Absolutely. And Frankie, welcome back to our show here on a Friday, your regular appearance. As always, people look forward to it each and every week. One of the most popular things that we do at Tackle Trading across all of our product lines, Frank, is having you break down some charts each week. What do you got today, number one, and how are you doing, first of all?
Well, doing pretty well, except the little button I have to make my camera work is not here. So I'm the man in the machine again for the day, it looks like. I don't know exactly why that is, but I am the man in the machine. So like old times, I have no clue. I'm not even going to pretend to try to figure that out live, but doing well. It's been definitely a little more of a challenging week for swing traders, as Maddie alluded to. That's it's the
nature of the beast.
Well, here's what I'm going to tell you, Frank. This is very, very common. And I think when I just did actually auto muted you. So as you come off mute, you might get access to your camera. Generally, when there's a mistake.
The overlord had control.
He did.
I always knew Tim was tied to the Illuminati and the central bank.
Listen, I usually support Tim. I don't know why he's turned on me.
Oh, listen, it's human error, right? We always blame computers and software. I didn't click the button for you, Frankie, so we just did fix it. And you're looking great there today, sir. Got your cat hat on, I see. We got to start with cat there then. Take a peek at the chart. I know Coach Greg actually was looking at that in Trademasters earlier this week. It was a beautiful bearish retracement. Hey, Maddie, before we dive right into analysis, a couple things I want the team to do out there as we always get started. You know me, I got my checklist, right? I trade with a checklist. I run my business with a checklist. I do everything with a checklist. One, as you're coming into the show, give me a thumbs up. Let's make sure we hit those 50% marks each and every show. It helps us with the analytics. Appreciate everybody in Team Tackle who does that. New subscribers, I got to tell you, I keep talking about it for the last month or so. We are very, very close to 20K. It's an artificial thing for me, Frank, but it does matter. I like goal setting. Sure. I like hitting targets. That's been a goal for me for a little bit here. If you've not yet subscribed, click that subscribe button, click the bell, be the 20,000th subscriber here on our YouTube channel. I think that would be a really, really awesome thing to do. And now let's get right into the analysis, Matt. Been an interesting week. We've had We've had volatility back and forth this week, and obviously we're down here testing support. Got a hammer candle developing on the S&P. What's your read on the technical price action?
Well, technically, and we talked a little bit about this yesterday as we were breaking down the intraday levels from a zone perspective. But so let's just go back in time just a little bit. Look at that 4,300 zone as it tried to establish support levels as you come through to the market. A lot of you active traders understand how we broke that 4,300 level as the market really kind of came into the close. You see the drive down in price all the way down to about 42.60. As you can see, the double ding there at right around 42.60. Does that coincide? I always like to see if that coincides with any historical support level, but you are in that zone we did talk about on the daily support level. And so you break one, you go find the other one. The question is the intraday response that has been very impressive over the course of just the last couple hours or so, as it kind of nailed that first increasing support level. As you can see, you get the reversal coming into the very early morning market hours here. You start to see those moving averages in the short term crossover, giving a little bit of positive momentum. You start seeing now this as a higher level of resistance against now a higher level of support. And you got to like the zone it tested kind of into the cash open here. The cash opens have been fairly nasty, and we got yet another one here today. Look at that cash open as it was trying to fight in the early morning hours to get back up into that resistance level. You see that cash open come out, just smack down all the way down. But this is an important data point right here at 42.80. Look at the intraday resistance, build on the overnight action. Look at the stabilization with the slowing momentum candle right there. Come in right at that 42.80, fight back up. You have to appreciate the market's resilience after that fairly difficult cash open, especially when you're looking at a backdrop on the daily chart that has been fairly nasty for the entire week. Every time it tried to go up, even a hair, got just absolutely blasted right back down. Can ultimately this wick be the support? That's an open question coming into next week. I have my concerns in certain sectors. I have my concerns, but again, you are seeing a little bit of bullishness coming into the intraday as we end a tough week in trading. One last thought before we bring it to Frank, though. Nothing's real, especially this week, until this market rings that bell in a few hours.
That's exactly right. Yeah, we've been selling into the close much of the week.
Very, very important close. It's the most important close for the week. It's been a tough week for the market. You are finding daily support. You're starting to build a little bit coming into the close. But if the market pukes all of this up again, it will show you it'll show you where the market's mentality is towards this current market condition.
Mm-hmm. Frankie, two questions. Number one, what is your current read on the market, and what is the most important thing for us to be paying attention to as this market tries to find some support here on the intraday and find some stability?
Yeah, I mean, overall, I echo Maddie's sentiments. I think for a win, a close in the green would be a good start, right? I mean, this is the first candle we've seen in a little while that's like, you know what, that's a good candle, right? At least if you're a bull, like Maddie said, it's not closed until it's closed. But I think to really get some real degree of confidence back, at least for me, I kind of want to see it take out that current downward trend that it's really developed over this week. That's going to put us somewhere in the ballpark of 43.50, give or take, and depending on how exactly you've drawn your trend line. I do think we want to kind of see that. I like what I'm seeing early. I'm always really interested in the interaction between the 9 and the 20 on whatever time frames. And in my case, I use the hourly as an intraday time frame. That's a good first step, but there is going to be a lot of overhead. There's a lot of mixed charts too. I mean, you think about some of the bears, there's some really ugly things, but you're like, would I really dare go short right now? They're pretty darn extended to the downside. On the other side of things, there's a lot of bullish charts that you wouldn't want to touch, right? You're like, nope, not yet. But on the other side of the coin, I mean, I found very clean breakouts, very clean breakdowns, snapbacks at good support level. So it is a very, very mixed market. And I think as we're going into this, upcoming earnings season, we're really going to have to put on our stock picking hats and not and not just take for granted that stocks always go up or just free fall or anything along those lines. I think in this market condition, it's very important to being open to both types of trading, both bulls and bears, and not get too dug in. You might have an opinion, which is fine, right? But not get too dug in on that opinion, because there are opportunities on both sides of it.
Matt, any other thoughts here on the S&P?
No, I agree with that. I mean, again, haven't done all of my scanning yet, but from what I saw, I mean, you are seeing a mixed bag in tech. You're seeing a very mixed bag in communications. For example, when you are looking, just take for example, just two stocks in communications very quickly. Let's take a look at, I'll erase my lines very quickly there, just kind of following Frank's intraday analysis right there. Very good intraday analysis. But when you're coming back out to the daily chart and you take a look at, say, Facebook, for example, you can paint a wide story on Facebook from a bull and a bear perspective.
Good.
Right? I mean, the bear, take me, for example. I'm not a fan of Facebook, haven't been a fan of Facebook for a very long time. Whenever there's the Pepsi Coke challenge between Facebook and Google, everybody knows who I'm going to choose. It's always going to be Google. And that's not anything positive to say against Google. It's just how much I dislike Facebook. And so my point is, I have a subjective, opinionated viewpoint of this. And so how I'm going to see this as a nice, nasty, volatile, bearish downtrend that hasn't broke the 9 EMA in any capacity, that's setting up in a very good low base environment, where if you do violate support, you really don't see anything underneath that till you get to probably 330. So you're targeting 330 by, in that 200-day moving average range at 315. That's the bear case. But the bull might say, well, yeah, but look at the weekly chart. You're seeing a little bit of slowing momentum on that weekly chart. You're coming into a fairly decent support level around 335. You can paint a bullish or a bearish case on a company like old Facebook. When you take a look at, say, a company like NWSA, for example, I look at this as a downtrend, short-term downtrend here, but look at this. This is what I kind of like about it. Let's take a look at this very quickly. And Frankie, add your thoughts too here as we go. But you take a look at that nice little downtrend coming down, double bottom type analysis. I like this consistency of that trend line coming down. You break out of that level, you get above the 200-day moving average, and then you got this nice tight flag against a good reversal characteristics. I'm not sure on News Corp you could paint a bearish perspective. Doesn't mean it doesn't go bearish, but the pattern is tending bullish. The trend is starting to tend bullish as well. And so in my opinion, there's an opportunity there on good old News Corp there. And then the last one I want to bring up, just in terms of an example then, is kind of Verizon here. We talked about Verizon earlier this week, both on, I believe we talked about it during when it was yesterday, we talked about it. We also talked about it on Tuesday's show as well. There's a unique opportunity here as well from a bull or a bearish perspective, right? When you're looking at that handle at 54, saying the bull's like, yeah, we love 54. Why do we love 54? We love 54 because 54 is rock solid support level historically. And if it does violate, you got a double bottom support level right around 53. There's a backdrop there, but look at the trend coming to it. There's a bearish case there as well. And so there's a little bit of mixed bag type analysis in certain sectors in the marketplace. But if you come back to the broad market here very quickly, the reason I feel like today's close is going to be very important is a lot of those bullish cases are going to be based on the market kind of showing a little bit of bullish momentum coming into that close. Because if we get rocked back down, those candles on those charts aren't going to be looking nearly as good today.
Gotcha. One thing that we do have to have a discussion about, we can go through the other indexes here in just a minute, and I think we got to go next, is politics, Matt. And that is not always the case when we're talking markets, but this week and until we get some resolution on these different storylines, I think we're going to continue to talk about it around government funding, the spending bill, infrastructure, the debt ceiling. Matt, just give us an update. What does it mean to the market? What's going on in Washington, and what should we be watching for?
See, Frankie, I thought he was going to give us breaking news.
Nope.
like something happened in the last 24 hours. We're doing the same thing. So
well,
there's no breaking news.
did pass the
like you acted like this was like breaking. Like I'm like, okay. I literally went and updated CNBC, CNN, Fox News. I was like, who's got it? Who's got it? Did they call for a vote on the infrastructure? So apparently not. So let me give the exact same news I gave yesterday. No, I kid, Tim. But when you look at this, though, what we now know is basically this. Number one, Biden signs the spending bill that funds the government through December 3rd. That was expected yesterday. That did come to fruition yesterday. Pelosi was all throughout yesterday. She was calling for a vote on the $1.2 trillion infrastructure plan. I don't know about you guys. I did not stay up for this one like I did the healthcare one. I can tell you that. But this morning, that vote, I found out that vote was pulled as the progressive side of the Democratic Party did not support the $1.2 trillion infrastructure bill, as they are seeking a little bit more agreement on the non-traditional infrastructure bill in the budget reconciliation, and that is the $3.5 trillion plan or number that Biden has put out there. And so we really don't have any degree of conclusion yet regarding what is going to happen with the infrastructure plans, at least until we get some actual breaking news.
That's right. So basically, the things that we really want resolution on, we don't have any progress on. And the one thing that is going to happen happened.
Yeah, it was expected to have Biden sign and again, that's a positive thing. Let's not discount that. It's a positive thing to not have the government shut down last night. That's a good thing. But again, we do not have any conclusion on the debt ceiling yet. That still has to be ironed out between now and October 18th. And so we still got about 2.5 weeks to iron something out on the debt ceiling. My thought process hasn't changed from earlier this week when we discussed it. I still think they're going to ultimately get something done. And I wish they wouldn't run this to the last second, but the most likely scenario is they're going to run this to the last second. and so I don't see any conclusion coming on that in the short term. But again, you never know what the political environment's going on right now. Yeah. And so on the infrastructure plan, fully expect the $1.2 trillion to eventually get passed. Again, these votes, guys, these are artificial deadlines. They're not an actual deadline that you have to do. It's like, oh, I'm going on vacation tomorrow, so I want to get it done today type deadline. And so when you're looking at the $1.2 trillion, no, it was shelved last night from a vote perspective, but that's the progressive wing of the Democratic Party simply not wanting to give up the leverage on the $3.5 trillion plan. Let's see where that transpires over the next few hours. From what I gathered last night, we finally did get Manchin's top line number that he's willing to support on the 3.5, and he started at 1.5. So if he's starting at 1.5 and they're still at 3.5 and they haven't given us any inclination about where they're meeting in the middle, it's difficult to assume this is going to get done
in the short term, at least.
In the short term. Yeah. Again, this is just my opinion here. I think they do come to a conclusion on the debt ceiling. I think they'll run the red line on it, but I do think they will get to a conclusion on it. The $1.2 trillion infrastructure plan, that is bipartisan support. I would be shocked if that doesn't get done. And quite frankly, we should hold our politicians accountable in the next time we vote if they don't get that $1.2 trillion infrastructure plan done. That is supported. Think about America right now. Mm-hmm. That's supported by so many people, so many people, because it's needed. It's needed to ensure our roads, our dams, our bridges, our digital infrastructure, our security, all is taken care of. And so wide support there. All of this is regarding the $3.5 trillion and ultimately what do those progressive Democrats get in the budget reconciliation that Pelosi's trying to thread the needle in right now.
Yeah. We all want resolution in the short term. We just need to let it play out, I guess. I appreciate the thoughts and the update right there. Okay. All right, let's go. Let's go through the rest of the market here. Index is next. Flash me around. And I do want to look at sectors today. Obviously, each and every Friday at Tackle Trading, the coaches get together. We rank everything across the markets. Want to get you guys' updated thoughts on a little bit of what's going on out there. But let's start with these indexes, man.
Well, let's kind of shift into the Dow Jones a little bit here. And the Dow Jones is in an interesting position given the fact that it has not been as good as some of the other indexes over the course of the last 6 months. But what has occurred is kind of that Russell 2000 where you stay in this neutrality over a certain time period, and then these slower, longer term moving averages do catch up. Well, that is what has kind of occurred here in the Dow Jones as you see this longer term neutrality. Look at the 200-day moving average coming up to it. You saw the same thing occur in the Russell 2000 over time, and that has certainly played a role as well. But when you look at the Dow Jones, I do find that the Dow does represent a fairly decent opportunity in the market, given the fact that, Frankie, as you're going through your scans, what are some of the hot sectors and industries you're looking at? I heard you talk about the banks out there and the regional banks, right?
Yeah.
What are some of the other areas of the market?
Energy's looking solid. Some of the the airlines, transpo type of things looking okay. Some of the defense, mixed bag in defense for sure, but there's at least a couple in there I thought were interesting looking. So I'm with you on the Dow. It's really an interesting spot. We've got good support on it at this point in time. We've got that rising 200-day moving average and healthier charts, at least in some of the areas within it. And being only having 30 stocks, it's going to be easier for that to be the case, right?
Well, when I'm looking at it, though, those 30 stocks really do represent a very broad base in the marketplace. When you're talking about, energy, or when you're talking about the banking sector, when you're talking about the discretionary sector, anything tied to like economy reopening up plays, those are typically some degree of Dow sensitive. And that's what I really kind of saw in my early scanning today was things tied to economic reopening plays looked very, very, very consistent from a technical perspective. And then you get the Merck news that comes out earlier today, right? Yep. The Merck news was just fantastic news for any economic reopening play or any forward projection analysis going into 2022. And Tim, let's just kind of cover that news right now. Tim, will you go through the Merck news very quickly?
Couple things. Number one, I dug into a little bit and I saw the headline first. And I'm like, holy cow, that's big news, not just for markets, but also just in general. I thought it was a really important story. Merck is surging here today. It's a Dow component. It's the top gainer in the Dow out of those 30 stocks that you talked about. It announced that its COVID-19 pill that they use as an oral treatment if somebody gets COVID, cut the risk of death and hospitalization by 50% in their late stage study. They are filing for emergency use authorization with the FDA immediately. The stock gapped out. I don't think there's a trade here, by the way. I don't know. You guys can break down the chart for me.
There's a theme that might develop.
There's
right. Not a trade on
Correct.
Merck.
Huge news for a lot of things, but reopening theme for markets from that perspective, I think it's a very, very important story.
Well, and correct me if I'm wrong, but this is in COVID patients that are not hospitalized that are at risk for hospitalization, and it showed a 50% reduction in that hospitalization, correct?
That's exactly right.
That's big news for the economy reopening, for handling the COVID situation, because we all know the COVID situation is an ongoing conversation. It's not like it's just going to all of a sudden just be gone. It's about navigating it, mitigating any damage, and making sure the economy continues to improve. And this Merck news goes in a very positive way towards that. And so when I'm coming back to the Dow Jones and I'm looking at the Dow today, you look at the backdrop of it over the course of the last 6 months, and not a lot of love, not a lot of activity, not a lot of action. But you see this over time, this longer term moving average catch up, and you see a little bit of a double bottom type analysis with a really good support level right there at about 33,000. And then when you take it down from a micro level, I'm looking at a nice little reversal. Look at that head and shoulders reversal type pattern. If you can kiss back up above 34,000 here, that looks like a little bit of bullish momentum that could come into the open. And again, little premature. We still got a good 3 hours before the market closes here today. That close is going to be very, very, very important. But once again, I'm seeing, at least on today, you're looking at a Dow relative strength here today. The areas of the market that are solidifying themselves are tied to the economy reopening plays right now. It does look like an opportunity, but that opportunity, I think, really, it'll change. In my viewpoint, it will change slightly depending on the close.
Yeah, the close this week has not always been very positive here, so we have been sliding into it. Anything else you want to add to the Dow there, Frankie?
Nope.
No,
Yeah,
no.
go
The
ahead,
only thing
Frankie.
I would add to that, not just the close, but the follow through that we see on the futures open. Right.
Yep.
The close
Sunday.
is very important, and then what does the follow through look like? Is because that's what we really need to see. I mean, you have to get the first step, right, is showing signs of life. And when you look at that intraday, I mean, if that was just a daily chart, I mean, I know me, I'd be bringing that to the scattering report meeting. So it starts there. But
If
can we
that
get
reversal
that
was a
through?
daily chart, yeah, that's a swing trade.
For sure. Yeah. I mean, that's
Absolutely.
like
100%.
sign me up. Right.
100%.
100%.
Good,
So
good
can we get
reversal.
can we get follow through, right?
Yeah.
And I think there's a fair chance that we do, but we're gonna have to wait and see. Close open on the futures, and then hey, let's if we get what we want to see, and maybe that's not specifically on Monday, we don't have to go all in, right? We can take steps to work our way in, because on the other side of it, even if this is quote unquote the short term bottom, whatever that exactly means, there's going to be lots of layers and challenges to navigate on lots of these charts, right? That we're going to have to deal with. So
and
probably
can I just
not a
say
V
one
shape.
thing from a disclaimer type perspective? We're talking about a double bottom on the Dow Jones in a market of huge volatility. Yeah, we're not talking about going all in based on intraday confirmation.
No.
It's baby steps in analysis that leads to consistent price action. And so if A then B type scenarios, if support holds, the intraday builds, those charts that we're talking about, and we will talk about later on in Frank's charts, and we'll talk about all day long today in the scatter report meeting, and we'll put out in our stock and our options report over the weekend, those charts solidifying themselves from a swing trader's perspective. It's important to get this type of confirmation we're talking about. But yeah, Frankie, I'm with you. It's not all in. This is a crazy market right now. This is tight position, and make sure you got stop losses in play.
Yep.
Yeah, and individual plays that are setting up, obviously, those little things. Yeah. Let's keep flashing indexes, sectors, and then we're going to do commodities. Where do we want to go to next here, Matt?
Let's talk very quickly about the NASDAQ, but again, we can get into that when we do talk about sectors. But the NASDAQ is certainly under pressure against all the major indexes out there. It's the one that has really been in trouble this week. And when you are scanning in this sector, I mean, let's just take a look at the number one component in this sector, and it does not exactly look like it wants to get in that buyer's mentality yet. You take the look at the second largest component in this sector, Microsoft, and I think it's blasphemous to talk about shorting Microsoft under 280, but I'm also seeing a low base scenario that has not even tested the 9 EMA in the past week and a half. And so I think we got a little bit of time here on companies like Microsoft, because if 280 does end up holding, that weekly chart can start to look a little bit more pretty over the course of the next week. The point is, when two of the biggest components look like at best a 50-50 crapshoot, it's probably a stay away in the sector. And that's how I see technology right now. I think whatever battle's happening between the bond market and the tech sector right now, there's got to be some degree of slowing momentum and some degree of time to heal some of those wounds right now.
Yeah, I agree. The weekly chart is in a zone that you would be interested in, but it needs development across multiple timeframes, like much of the market that we're in right now. What about the rut last here on the indexes?
Oh, rut's just doing its ruddy self.
Being ready.
It's stuck in a rut.
Yeah, it's stuck in a rut. There you go. There you go.
Listen, you can't complain about the rut, right?
Look at you bringing the jokes today.
You're on top of it.
Oh yeah, that was a home run
last night.
That was a home run, I'm sure. All right, let's keep going. Let's go into the sectors next if we can. Break them down as we go here, Matt. Obviously, we're going to always go through growth, cyclical, then defensive. We had some downgrades last week. I know we're going to have downgrades this week. There's no question about it. Different areas that have changed in pattern and development. What are you seeing in the sectors?
Well, let's first talk about the growth areas of the market, and I'm going to do this a little bit of rapid fire fire style on technology. We did already talk about tech. You're seeing a little bit of violation against some fairly important support levels right there at 150. Obviously, a very similar type analysis in the tech space that we were looking at in the actual NASDAQ as well. But even in some of the opportunities you're seeing in the tech space, I'm not sure the confidence is extremely high. Let me give you a little bit of a CRM though, Frankie. What's your read on CRM here? I mean, tech itself is garbage right now. And again, garbage is a relative term to the short term.
Right.
It is, the charts are garbage, right? We need to see some degree of slowing momentum. But in a week that's been crazy train for technology, here's CRM trying to stabilize the 270. What's your read?
Yeah, I mean, you have to like it. It's been a little bit gappy, I guess, as of late. Right, had that big gap up and then a gap down. Granted, part of that was probably market related, but you gotta like. There's one lesson I've learned over time on CRM, and that's that you look for the pullback opportunities and not the breakout opportunities. It's a tough breakout trade, I think personally. But when we get that breakout, when we get that momentum, we at least have interest. So working back into that old resistance, we've really spent the week stabilizing, as you pointed out. I could absolutely see, an argument to start looking at building into a trade from a bullish point of view very, very soon on CRM. I absolutely have them in my watch list.
Yeah, and obviously I'd like to see a little bit more upward moves in price here from a confirmation perspective. But when you start a week as volatile as technology and you end a week with 270 holding for 4 consecutive days, I do feel that is a positive first step in that analysis on CRM. But for every CRM out there, I got a Micron, for example, kissing against major support. You have an FTNT, kissing against perhaps potential reversal analysis underneath 284. When you're looking at WDC, Western Digital here, nice little continuation under major support at 55. And so just you see that mixed bag, right, where you see maybe a couple opportunities on the bull, but most of the opportunities I actually did see from a technical perspective was either very mixed charts you want to stay away from a bear like Apple or Microsoft, and then just a bunch of mixed analysis. When you're looking at when you're looking at this sector as a whole, Frankie, last week we were talking about, I believe it was downgraded the week before to 25. I think we are staring at a downgrade here, Frankie. What's your thoughts on that?
Yeah, I think you have to. I mean, I think for the most part, you nailed it. When you look at tech as a whole, I would say there's a handful of things that are really interesting looking from a bullish point of view, a handful of things that look kind of interesting from a bearish point of view, and a lot of things that are like, you just leave that alone, let time pass, let these develop. There's a lot of charts that we might want to bully our way into trades, but we probably don't want to be doing that, right? So I think it is a downgrade, but for me at least, I would say it's more of a stay away than, get a whole lot more bearish on it personally.
Yeah, I mean, we're right now at 25 on technology. That was, based on where we were last weekend, getting back up above 155. Obviously, coming into this week, you confirmed that bearish retracement. I think you got to respect the short-term volatility, and obviously, we have not established a higher level of resistance at all yet here. I think you got to respect that, but when you come out to multiple time frame analysis, you're still looking at a slowing momentum, first test of that 20-day moving average, which, guys, I mean, technically here, slowing momentum, first test of that 20-day moving average. Look what happened after that.
Exactly.
So I don't think this is a moment where it's like, oh my goodness, run for the hills. I just think we need to see some slowing momentum here. It's a downgrade for me. It's just a matter of, all right, you got to respect the weekly chart. I think it's a 10-point downgrade, parking at 35 until the momentum does cease. But we'll see where all the coaches' heads are at. But Frank, that's kind of where your head's at too.
Yeah, I'm pretty much right in there. This can look both a lot better and a lot worse after one more weekly candle, right? It's an important
week.
Yeah.
I do think it's an important week, and we start getting into a lot more earnings next week as well. And so,
Ugh.
I know Frankie. I think Frankie hearing earnings is like Tim asking me my opinion on politics right now. It's just like, oh,
I'm pretending it does.
no.
I'm living in the world where I have one more week before I have to be thinking about it nonstop.
Listen,
I'm in denial.
you're in denial. Well, the next time Tim asks me my take on what the political condition is, I'm literally just doing this. I'm going away. I'm
Matt,
hiding.
I had a question for you. Do you think that the
Yeah, let's
Senate?
talk more about the technology sector here. That's fantastic. I think the Senate doesn't like the technology sector right now. That's what I think. But let's take a very quick look at communications. Very similar on your technology, the weekly chart on comms. You're coming into some fairly important support levels. I think Facebook and Google really do tell the story here on the technical battle that is occurring. On the daily chart, you got a little bit of a downward movement in price. Weekly chart, you got to like the 80 handle from a support level perspective. Frankie, we started last week with technology at 25. We had communications at 30. I'm seeing a very similar price response here, as a very similar battle, probably like the weekly chart on technology, just slightly more. But I kind of feel these are both looking at downgrades and probably very similar type rankings. 5-point downgrade for me in comms, 10-point downgrade for me in technology. Where's your head at?
I'd probably be just the opposite.
Mm-hmm.
I'd probably be 10-point in comms and 5-point in technology, or 10 and 10. I look at the technology or the communication space, and like I do like that news court that you brought up. I think that's a really interesting looking chart. There's a couple of the smaller type players like OMC and IPG on the pullback, maybe off of some recent showings of reversals. At least Netflix obviously been on fire lately, but I look at most of it and I'm like, and I've got the trader hat on, right? I'm not thinking about what a sweet deal Verizon is down at the support level. I'm thinking, yuck.
Frank's like, I could care less.
Like, yuck.
Like, go talk to Mark.
Interested. Yeah, go talk to Mark or Greg. They'll tell you all about Verizon, and they'll give you a lot better information than I can, because I look at it and say, I'm not shorting Verizon if it breaks that support, but if I'm sticking my toes in some waters, it's not on Verizon for a trade. There's just a lot of charts in there that are very, very messy and very difficult, in my estimation, to be trading anything other than maybe on very, very short intraday type timeframes. So it's really kind of, as I look at some of the tech, some of the things jump out to me, and I'm like, you know what, I like it. And I can see a scenario where, we hold support on AMAT, right? Obviously, that's got some work to do, but I could see a scenario where we get a little bit of stabilization at that support zone on AMAT early next week. And I start thinking, hey, could I maybe start building into a trade here? I just have a very difficult time having that same confidence, even though likely they're going to move to one extent or another fairly close to one another. Right. I don't think there's going to be a lot of, a big difference between the two. It just, to me, feels like the comms are a lot tougher place to be wanting to build trades right now.
Well, and again, I do think, what you're seeing in Facebook and what you're seeing a little bit in Google, the two biggest components of this sector are telling the story of this sector. And when you're looking at Google here, you just broke the 20-day, you just broke the 50-day, you got pivot low, you got pivot high, pivot low confirmations. You're looking at a very similar type scenario on Facebook, although on Facebook, I mean, when you're talking about the battle between buyers and sellers of bulls and bears, I kind of like the bear edge here. I like the low base coming into major support. Let's see that. Let's see comms really kind of drive up. Let's see Facebook drive up. I think this is a little bit of a stay away sector until we get some degree of clarity regarding these two major components. Facebook number one at 340, and Google trying to figure out whatever Google is doing in the middle of a short-term downtrend against a pretty decent intermediate, pretty decent primary and intermediate uptrend. But while it does that, again, I am looking a little bit at that news. I keep coming back to that News Corp. I just like that type of reversal.
100%.
Momentum reversal. I just love slowing momentum reversals because it seems so consistent to me. When you get those 1, 2, 3 punch reversals, which are the V-shaped reversals, man, they can leave a lot of people behind. Something like this, slow, methodical, allows us to take our time to make a
Exactly.
decision. You know what I
Exactly.
mean?
Yep, I'm 100%. And I'm with you 100% on that
Um,
chart. I'm definitely very interested in that
I mean,
reversal,
24 is the number I'm looking at. Getting back up
getting
above
back above that
24,
24 and looking to work from there. Yeah, and there's a lot of great
in
little
that
support
range.
catalysts on top of the little flag and reversal. There's a lot of things to like about
Yeah.
that chart individually. Yeah.
Well, and then the last aggressive sector here is discretionary, and I know this. I know the past week has been tough for the market, and I know it's been a little bit of a choppy mess out there. And I was fully expecting to, as I did my detailed scans, because I only detail scan on Friday. Like
Mhm.
after Friday, I work off reports, right? I work off
Yeah.
stock options reports, work off your personal watch list and whatnot. But in terms of, I expected to change my opinion a little bit of discretionary, because discretionary, I feel like it's held up against the market volatility fairly well, but this week it did not. This week it kind of did the exact same thing as the market. Even in recent bouts of volatility, where we saw the gap down in the market 2 weeks ago, I mean, you got to love that price response coming right back up. This week coming right back down. And so I thought I was going to be a little bit more concerned, Frankie. I wasn't. When I got into detailed scanning today in the discretionary sector, I think you really did start to see a theme develop in the discretionary sector. And I want to throw out a couple charts to you, my friend, and give me your quick read on it. Let's take a look at an economy reopening play in Hilton. What's your read on Hilton here?
I really like Hilton. There were a few other casinos as well.
Caesars, Marriott,
Caesar, MGM, even Penn.
Series MGM. Yeah, I didn't
Yeah,
look
I
at
mean,
Penn because I haven't
even
got to them yet.
I mean, it's behind the others, but on the other side of that, by being behind, you have more to catch up in
By
theory.
being
right?
behind, not as good of a company as
Right.
MGM. Is that what you're saying?
Well, maybe that, but I'm
Okay.
saying not as good of a chart as
Not
them.
as
I'm not here to
fundamentally
pass
strong.
judgment on you,
Oh,
Penn. I've
doesn't pay a
no.
dividend. Can't write cover call. Okay, never
But
mind. I
I guess
digest. Go.
there's
Doesn't have
something for
access to as many
everybody.
markets. Yeah.
Right.
Yeah.
There's something for everybody in some of those spaces, I guess is the point, right? That
Yeah.
I am trying to make. But yeah, 100%. I do like Hilton. I probably just Hilton and MGM would be a tough.
I'm gonna put you on the spot then. Okay.
All right. Give me
Casino. Two casinos.
Okay, so we got MGM.
MGM, both tied to economy reopening.
Right.
Or CZR.
I was just thinking Caesars. Yeah, I was just looking at this stock. Yeah.
Okay, so both very similar, right? You got the MGM multiple time frame breakout with the snapback retracement. You got Caesars breaking out of a weekly chart, flag-based pattern, testing that old weekly channel. Boom, boom, boom with a breakout today. Which one do you prefer? Do you prefer the previous momentum on Caesars with the flag confirmed breakout today, or do you like the MGM pullback retest of the 20 with the potential confirmation above 45?
I think I'm going to go MGM. I think
I would too.
I mean, it's close, and I would fully expect that they're both right or both wrong. So, but I think it's going to be a little easier to build a trade on MGM, at least the way that I like to build trades. Mm-hmm. So I'm going to give it the edge because I think it will be a little easier to build a trade off of on MGM.
Yeah, and I like them both, but I also like this zone of support that you're breaking out of on the weekly chart.
Yep.
And if that daily chart does confirm, meaning the confirm the bullish retracement and thus 3-day pivot breakout of 46.
Yep.
If that happens, that long-term chart looks really, really, really good.
Exactly.
Well. So exactly. I kind of like that on MGM. And again, we're splitting hairs a little bit.
For sure.
Caesars looks really, really, really good too. In fact, Caesars probably has more current momentum in short-term trend than MGM does.
I think you could say that. Yeah.
Right. But I started scanning and right, Hilton versus Marriott stood out to me. Caesars versus MGM really stood out to me. But then you got other stocks like, what do you think of Tractor Supply Zone here, Earl Frank?
Oh, I brought this one up to Maddie in the meeting when one of the first things, because when we first get together on Friday mornings, it's just yelling sticker symbols at each other.
It's just
look at this. Nobody looks at anything because they're just too busy yelling about what they're going to look at next. But absolutely love Tractor Supply. We might need another candle or two before we start to want to be taking action. but let's just paint the picture. Nice breakout a couple month or so ago, right? Textbook. What else could you ask for? Nice follow through on the breakout. Never really shook you out. Didn't have any weird candle to get you into potential stop loss issues. Rode that 9, and then predictably, as the market sold off, Tractor Supply kind of capitulated. We're right back to where that breakout started, right? We loved the breakout, or at least if we did love the breakout of 200 initially, how do we not like that second chance to get into the breakout? The target would remain the same, right? I mean, if you think about however you might be targeting something like this, and I just think about the way that I target, things like this, which had these guys at a target about 220, that hasn't changed for me. Mm-hmm. So 100%, I'm very interested. I like what you did there, Maddie, because I do think we need a little bit of, a couple of candles could go a long way.
Need a little bit.
We do need a little bit. A couple of candles could go a really, really long way, could really help shore up that intraday, right? Get that going back in the right direction. But 100%, I don't know who else is going to have Tractor Supply in their watch list, but I know for a fact I am.
You're going to have it there. Yeah. Gotcha.
Trying to show the scale right there. I would love a couple inside candles here. Even just one. One's fine too.
Oh, well, yeah. Just
candle,
one could go a long way.
Back up above 204. That looks really, really good on Tractor Supply.
It's a fun sector to scan in. I'm looking at a bunch of companies as you guys are flashing through this. This is great conversation. It's such a unique sector, discretionary.
Do you know what doesn't look good though in this sector?
Let me look.
Just going to say. I am not going to scoreboard because I'm not going to show you the weekly chart. So I'm not going to scoreboard. But I kind of, CMG gets gross under 1800. Just keep an eye on that.
There you go. All right. Next.
I had a gross burrito joke, but I was like, I'm not going to go there today.
People got to eat lunch, bro.
I'm kind of getting hungry.
Show some discretion here for the discretionary sector.
There is one other in there though, Maddie, in the restaurant space, and that was that Darden DRI that had
I did see Darden as well. It looks sexy.
Blowout on gap up on earnings. We're traced into that old zone, showing a good candle here today.
Tim's going to veto that one.
Nope, can't. That's a beautiful chart.
Listen, the day is young, Tim. The day is young. Depends on how well we behave the rest of the day. Right?
If it closed right now,
mm-hmm.
where this is at, right this second, I'm taking it for my favorite pick next week.
It's really, it's a really good spot for sure.
I just love the combination of positive earnings response on the breakout on the weekly chart. You look at that breakout on the weekly chart, and then you get that Cody snapback special where it comes back and gap fills, drills the 20-period moving average, which coincides with the entire historical support level, which just so happens to be $150. I like the spot it's in. I think it's cheap risk against a really, really, really good technical setup. Let's see how it works. Thank you, baby. Let's see how it works, let's see how it closes. But yeah, I like the position. I see it very similar to Tractor Supply, Frankie.
Mm-hmm.
Yeah,
but a positive earnings catalyst with it.
Sure, gotcha. Let's roll. Let's keep rolling. We got good momentum here. Good conversation. What do we got next?
Okay, let's. That kind of sums up the discretionary conversation. After we take a look at a few of the stocks here, Frankie, we started off talking about kind of the sector itself. Last week we had the 35 ranking on it. Tried to break out, snuffed out, right back down. Frankie, after you've done all of your scanning and discretionary, where do you feel like the ranking is from a 35 handle perspective? Last week, we did maintain it at 35. This week, we're still battling 180. We like some of the areas of this market, but again, those are the good stocks that we're
right. Yeah, they're not all. Yeah,
they're not all the stocks
great
in the sector.
Yeah, for sure. This is going to be one of those for me that at first glance, I don't really want to downgrade. That's kind of what my probably ultimately my stance will be. But you have to respect the downward movement, right? I mean, you can't just ignore what has happened into, we did fail at the break at the end of the day, and I could make all the excuses in the world as to why that happened, but at the end of the day, doesn't matter. It did happen. So I think this will be a slight downgrade, just maybe 5 spots for me, simply to respect the downward movement in price and to respect the increase in volatility, the failure of the breakout. But definitely one of my favorite areas from a bullish point of view, at least going into next week. There's some nice setups, I think, in this space.
Technically, I'm right there with you. I think you got to respect the failed breakout of 185. You got to respect the current market volatility. You got to respect the downward movements in price we've seen this week in the discretionary space. And yes, I do like a lot of the names that are tied to the economy reopening in the discretionary space. But again, for every one of those, you have a CMG that's showing a little bit of weakness at 1800. You have MHK here, which showing short-term bearish downtrend, kissing against major support, which certainly can be violated. And these are all big-time S&P 500 components as well. And then you got Hamish Brands that got absolutely blasted this week and now kissing against major support as well. And so it is a mixed bag for me in the actual sector. I do think you got to respect the volatility and the downward movements in price and the fake out that we saw from last Friday. But Frank, I tell you, after I scan, I don't want to. I don't want to downgrade. Technically, I'm at a 40. This is a pure 40 for me, a 40 preparatory breakout scenario. But again, you're not at resistance. You're kind of a little bit at that 180 support level. I'm a 35. I've given this one a lot of thought. Upgrades, downgrades mean a lot to me. I've given this one a lot of thought, and again, I think the quality of some of these charts stand out to me. So the sector itself is a 40, but again, I think underneath the sector looks like a 35. So I'm going to stay at a 35.
Yeah, and that will be my debate, right? Because I echo that.
I expect to lose it. Like I expect to lose that debate against all the coaches because I think technically they would be accurate.
Yeah, I think that's fair. But regardless, I think this is an area that's not going too far, right? And still very much a standout area for setups as a whole.
Yeah. Sure. All right. Quickly, let's get into a couple sectors in the economically sensitive cyclical areas, and that would be energy, basic materials, industrial, as well as finance. Quickly, from a materials perspective, Frankie, we're kissing against major support at 79, a little bit of short-term volatility. I think the ranking that we, and again, looking forward to the debate on this, but a negative 45 ranking. I mean, this feels 50-ish to me, honestly.
Yeah.
I mean, park it at 50. If it breaks 79, you're looking at a fairly downward movement in price. But again, I think you do got to respect where that 200-day moving average is. This feels like a 50, but I don't want to upgrade, so it's probably going to be negative 45.
So yeah, I mean it's right there, right where we're being very, very cautious and non-committal one way or the other to the sector because there's just not the clarity.
Why would we commit to the sector when the sector hasn't committed to us?
Exactly. Until we get that clarity, we just got to wait like everybody else, right? And so, but I do think you're right. I mean, I think, I'm not thinking about literally a K trade, but I think this is a good K trade type of, scenario where, hey, if we break down, that's, easy to downgrade it from wherever I am. If we break that resistance, really easy to upgrade it from wherever I am, and anything in between. Hey, let's just see.
I just think we need more clarity here.
I agree.
I just 100%. Think we need more clarity. What's going on in the specialty chemical space? What's going on in the gold space? What's going on in the copper space? I think we need more clarity, and the only way that riddle gets solved is more time. You got to see that first. I got a very similar read on the industrial. You're looking at a 45 handle here, but I got a very similar technical read on industrials versus materials. Materials more volatile, materials a little bit more concerning. If materials is at negative 45, I like industrials at 50. If materials is at 50, I like industrials at 45, simply because industrials is a little bit less volatile than what we are seeing in the actual basic material space. Very quickly.
Yeah. CAT Frank, there's a conversation going on in the chat. You've got a hat on here today, Caterpillar. We're talking industrials.
Yeah.
Are you mocking Coach Mark? This is what everybody wants to know. Team Tackle's discussing it. He lost
Is
to
this a thing?
He lost to.
this
Yes,
a
they
thing?
are absolutely.
It's a
Yeah,
thing.
it's a thing. It's
I
a
love
thing.
this thing already.
Mark lost to one of Coach Greg's picks on Wednesday to a Caterpillar analysis on a bearish retracement.
Great job by Greg. That was a nice little trade.
So, are you on Team Greg or Team Mark, Frank?
I'm on Team Greg right now, but the beauty of having the cat hat is however this plays out, I can say that's what the cat hat meant. You just misread my
misread the intentions. Unfortunately, you gave us your intentions. You said you were on Greg's team.
I am, but mostly it was just the cat hat day. I
get it's a green candle. Don't celebrate. Don't celebrate, Mark. Don't celebrate. No.
He's adding to a position just to spite Greg. He'll lose money if it means he can spite Greg.
He's like, I'm taking money from the movie theaters in a great reopening position just to fight a spite battle against Greg and Caterpillar.
Yeah, Will in the chat said shouldn't. He made a joke about 250 calls. Mark actually probably did go spend a couple bucks on a 250 call just in case.
All right, moving on.
You never know. You never know. That's number one. The probability, the edge is to the downside here in Caterpillar. You just violated and you just confirmed. So that's number one, but you never know. But again, one thing I would keep an eye on if you are a bull in Cat or you want to be a bull in Cat, I don't think you're playing or messing around underneath 200.
Agreed.
Above 200, the picture changes dramatically.
Well, I mean, if you think about what that looks like, we hypothetically hold here.
That's a 1, 2, 3 breakout
above the moving
V-shaped
averages.
recovery.
We take out the bear, the stop loss the bears are using. We get back above that old support as new resistance for sure. So there's ways you can map that out.
And can I just paint the picture very quickly?
Sure. I
won't do this long. Okay. What I was saying was that's the 1, 2, 3. That's the V-shaped recovery analysis. And so I don't discount 1, 2, 3 V-shaped recovery analysis post-pandemic. Mm-hmm. But again, like it's got to
resistance first. You got to make that higher low. Until you make that higher low and break that resistance, you haven't done anything, right?
That's right.
You haven't done anything at all. Right?
100%. Now, Frankie, I know we're going a little long here today, but there's a lot of charts we got to talk about.
Yeah.
Let's take a moment. And let's just appreciate some of the charts that are establishing themselves in the energy space, though.
Oh, it's really easy to do.
Okay. And Frankie, Tim asked me my opinion in the pre-production show before you got on. It's like, so what do you think of energy? I'm like, why? I don't know. It's kind of like pick your poison. He's like, well, what do you mean by that? I said, well, would you like a retracement? Because if you want a retracement, we can bring Schlumberger to the table.
SLB looking real good on a little snapback retracement. Real good.
SLB, love the position SLB's in, right? Gotta love that. Okay.
Yes, sir.
Love
that's
that.
Nice.
All right. But if you don't like retracements, how about a couple quality high base setups, right? Let's take a look at ExxonMobil. Nice little pop. Breakout, W formation, get above all those moving averages, consolidate, breaking out there on ExxonMobil. If you don't like that one, what about a couple high base momentum plays? Right, this is a pop high base catch up. This is kind of like an earnings pop, right? Pop high base catch up, go. What about Devon? If you want something with big time momentum already behind it, here's Devon. And if Devon's not your cup of flavor, what about Conoco? Just chase bar by bar momentum. So you can go momentum high base with Devon. You can go just standard high base with Exxon. You can go high base with ridiculous momentum with Conoco here. I'm not done yet though. What about flags? Would you like a flag?
I would like a flag. Yeah.
If you want a flag, man, I got a good flag in Marathon right here. Look at that 2-3 day bar coming down. Look at the U shape happening, upward movements in price. But that's not even the flag that I'm that interested in. I like Kinder Morgan's flag here. I like the reversal characteristics, getting above all those moving averages. Look at the tight 3-day range coming down, 9 EMA. Look at this cluster right here, guys. Look at that cluster right there. Look at that right there. Look at that 9 EMA. Mark's girlfriend coming up and kissing on the 50. You gotta like that technically. And so I kind of like that flag, Frankie. But if you don't like flags, like who doesn't like a good flag? We all like flags.
We do.
But if you don't like a good flag, let's say you're the guy or the gal, right? That likes to have the heavens and the earths and the stars all align. Right? All align. You're not going to just like short-term momentum. I want daily time frames. I want weekly time frames. I want the heaven and the earth to align type time frame. Well, let me bring you a good friend of ours over time, old Pioneer Natural Resources here. When you look at the daily chart, you got momentum behind with a high base and a breakout with confirmation on the high base. Let's bring this down to a weekly chart. Oh my goodness, you're kissing above the 52-week high and you're drilling the 2-year high from 2 years ago. That looks like a multiple time frame type darling on Pioneer Natural Resources. But if that isn't good enough from a potential multiple time frame type breakout play, well, let's go ahead and let's bring on Marathon too. MRO, nice high base, hasn't broke out against the 52-week high there. Look at the momentum over the course of the last week and a half or so. Bring that down on the lower time frame, and I just really like this zone we're starting to look at here on Marathon. You see that weekly channel. Look at the breakout potential there. Coincides very nicely over here last year before the pandemic. That looks like a break of 14, drive to 15, and then just hold on tight to 17 and a half. Kind of like that one too. But Frankie, I'm not even done yet because I found a reversal. I did. I found a reversal, a standard reversal. If you like a reversal play, let's go ahead and let's look at PSX. Double bottom, double top. Let's break out a 73 and drive to 77. I could go on, but this is what the energy space looks like. What's your thoughts?
I mean, I feel like a kid in a candy store.
That's how I felt like this morning.
We're at
Baskin Robbins. There's 31 flavors. I don't know what to pick.
Yeah, we'll date ourselves. It's like Supermarket Sweep, that old game show where you just send me out with a cart, give you 30 seconds, and let me just pick. I mean, there is a lot of great setups in here. I mean, and there's, like you said, there's something for everybody in here. And so, listen, we liked it last week. It behaved this week. We've got a ton of setups going into next week. We've got crude still putting up the good fight, right? Hasn't broke yet. At least it hadn't, when we jumped into the show. But it's putting up a good fight, right? I mean, it is definitely hanging tough at a major resistance level, right? It'd be real easy to want to, take your money and run if you were in a bullish position at that resistance, at least in my opinion. So we get a breakout on top of that. Listen, I want to be involved in this space one way or another. Lots of ways to do it. I really like a lot of those charts. I think if I had to pick, I like MRO the best.
The multiple time frame on MRO. It's a good one.
Really nice. But I mean, you're splitting hairs between some really good looking charts. There is absolutely something for everyone.
And the simple reality, the ones you see on the stock and the options report are the combined what everybody loves. But I promise you, every one of us will have our own personal favorite of those because some of us like flags, some of us like retracements, some of us like multiple time frame. We're no different than every other trader out there. We like certain technical setups the same way everybody else does. But I do like the 31 flavor approach that is happening in energy. Now, we haven't broken out on crude yet. We're still kind of in that 75 to 77 zone. You got to like the position, though. You got to like the position, and I like the position in energy. We're certainly looking at an upgrade here, in my opinion. You are certainly looking at an upgrade. But after a week of consolidation, we still have not had the 9 EMA catch up. I'm looking at a 5-point upgrade until we get a little bit more market clarity regarding the entirety of what's happening in the cyclical areas and not just the quality that's standing out right now in the energy space.
Agreed.
That's fair. Yeah. Okay, good.
All right. And then last but certainly not least in the cyclical areas would be finance, Frank. And Frankie, what's your read on the financial sector right now? We had a 30 ranking last week. This week, you're looking at a little bit of a short-term flag coming into the 50-day moving average. I think if we do confirm here, Frankie, you're going to be seeing this as a little bit of front-running status going into the breakout. What's your read here in financials?
I 100% agree with that. I really like what we're seeing on the regional banks in particular. KRE, the ETF, could be a good illustration of that. But again, another 31 flavors of regional banks, right? Maybe even more than 31. But a lot of those, more regional type of banks they held up really nicely this week. They're threatening or trying to break out of that resistance. Most of them do have some old overhead, like you're seeing here on CRE. That's very common to what those stocks look like. But there's going to be some really good opportunities in there. You've still got Key. You've got New York. NYCB. You've got there was a bunch. Regional RF, ASB. I mean, there's a ton of really, in my opinion at least, really interesting flag or high base type of week-long consolidation breakout candidates with decent risk to reward. When you think about the actual sector itself, XLF, you got that pullback. Hey, we ran hot from our last low to our last high, right? I mean, we basically went straight up from 36 to just shy of 39. Let's be honest. We all wanted a pullback if we wanted a breakout, right? Nobody is too excited about buying a breakout after that big of a movement without taking a little time to cool off. This pullback has given us that opportunity. It can lead to pullback opportunities like AXP, for example, that got a little action at 180 a couple of times, but a nice pullback into that old resistance zone. Great candlestick here today. There's some really good looking charts. Sure, there's going to be some areas in there that are not as great, right? Some of the insurance companies, for example, like Progressive, PGR, are knocking on the door of a pretty, a really potentially nice looking breakdown, in my opinion. So there are definitely still going to be bearish opportunities in there, but as a whole in the sector, I like where it's at. Again, for me, I think the big debate that I always like to have, and I always like to get, as many takes as I can possibly get. It makes it all better. The big debate is, I like it every bit as much today as I did last Friday. Arguably, in some places even more, some places less for sure. But I do like it as much this week as last week. But there was the volatility. We are down on the week. So that will be my debate. This would be like a 2.5 point downgrade for me if we did 2.5. But then I'd complain that we needed 1.25s, right?
We're never doing that.
I promise you, we'll never be able to get the number small enough.
Nope.
The first week it'd feel good though, right?
Isn't it one of those scenarios though, Frankie, as a technician, where last week you're running hot, everybody's like, oh, look at the banks, and from a technician you're like, yeah, but I hate it going from 36 to 39 in a week and then going to break out. What's finance going to run 10% and then run another 10%?
Right.
I just don't like that, like from a technical perspective. And so I get it. Last week, everybody's like, oh, look at finance. Oh my goodness, it's going to break out. No, it didn't. It didn't break. It was an overextended scenario. Now you're coming back down into support. I like the distance it's running into that 39 handle a heck of a lot more this week than I did a week and a half ago as it was coming from 36. And so I like this opportunity here for, obviously we haven't broken out. The financial sector does have a 30 handle, which I do think probably represents the mentality of the sector, quite frankly. So I'm not sure we're looking at an upgrade, downgrade. For me personally, I know it took it on the chin a little bit, but sometimes when something takes something on the chin, it just represents an opportunity at support. That's how I see the financial sector right now.
Agreed.
You take a look at that AXP stock you had and I guarantee it's one of Frank's charts, right? Take a look at that. That looks like if you miss that breakout, this is what you're waiting for. You're looking for a snapback coming into your moving averages, coming into your old resistance pivot, looking for confirmation. You look at that on an intraday perspective. You see the V shape getting back above the previous day's high. Yeah, that looks pretty decent. I mean,
Sure.
in a world that doesn't look great, this looks pretty decent.
Yeah, it doesn't look too bad at all. JP Morgan's not looking too shabby. Might be a little difficult. Bigger banks like Bank of
I like
America,
JP Morgan here.
Bank of America broke out, is kind of just hanging around at that
Little flag on top of the breakout,
channel.
like that one.
So there's definitely Citigroup, a little bit of a different type of pattern. So some interesting things. There are a few things that are concerning, for sure. Morgan Stanley, one of my favorites, is hanging by a thread at support, for example.
There's a hanging around.
Some of the insurance companies are showing some signs of weakness. So again, we are going to need to be a little picky, but that's a good thing. We want to be picky anyway, right? That's great thing about being a trader is we get to choose which of these we actually work with and which ones we just wish everybody else the best with.
Yeah, and then when you're taking a look, Tim, just to kind of finish our sector thoughts at the defensive areas of the market, that would be healthcare, utilities, the real estate sector, as well as the consumer staples sector. Let's just start with the consumer staples sector. Very important test of the 200. It's choppy, choppy, choppy. There is nothing for me here from a sector perspective. This is a test of the 200, very similar to a test we had over here. We got close to a test in the volatility of last November, December. Really never got to the level, but this is a stay away until further notice. For me personally, I am looking at a little bit of a downgrade as you did see the increasing volatility yesterday. Any final thoughts on staples, Frankie?
No, I mean, the charts don't look good either. It's definitely one that needs time.
I didn't even scan in staples, and
I think I found one
scan
thing
in staples.
in there.
You saved yourself some time. There's
I saw it from the sector. I'm like, there's nothing there. Like, it's consumer staples number one. It's going to take some time. And number two, it got smacked in the face yesterday. I don't want to, not when you're seeing quality setups.
Exactly.
Like, I'll take 4 energy trades over anything in staples right now. Even if you get my point, right? There's just not a lot to look at here from a sector perspective. When you take a look at real estate last week, we had a 35 ranking on real estate. It's riding the 9 right now. And when you catch that pattern on an index or a stock riding the 9, there is no touching it until it violates the 9. Until it can show any degree of umped above the 9, I think it's a stay away from a sector. I'm looking at a downgrade here. Frankie, that doesn't mean there's not opportunity. Are you seeing anything in real estate?
No, not anything.
Kind of following the sector itself.
Yeah, I mean, it's going to fall. I mean, this is the first time in a long time XLRE has broken that 20 weekly, barring some dramatic miracle, comeback in the next 2.5 hours. It's going to close below that. Last week, we were testing it as support, right? Okay, well, maybe that holds. It really didn't even try. So, couple, that 9 EMA with that 20 weekly, when we start to reclaim those things, or hey, maybe we pull back deeper and different opportunities present themselves. But I don't think now is the time to go, chasing after the REITs.
I'm right there with you. I don't think it's the time. You got momentum to the downside. You got a horizontal support level right at about 44 and change. But that weekly chart just violated the 20, and you saw the volatility take hold after. And so I got the same opinion you do there, Frankie. When you're looking at the healthcare space, XLV very quickly last week ranking was right there in the 45. 45 handle for the healthcare sector. Where's my V? I'm seeing a lot of volatility here. You see what happens when you violate support. The Merck news aside, the charts are they're a gobbled mess of charts right now. Frank, what's your read?
Those charts are really, really nasty. You do have some of the big names like the Lilly and Pfizer maybe trying to establish some lows, but we're way away from that. That's not something I have to worry about, certainly the first part of next week. And so there's just so many things that are looking really suspect within that space. It would still be a tough place to trade anything out of, really short-term timeframes as a whole, I think. But I think that's probably an appropriate ranking for XLV at this point in time. See how we hold up at that 200. That's always an interesting price point, right? I'm always going to understand when somebody says, hey, Frank, I'm looking for entries at the rising 200 because, well, history suggests that's a real sensible approach to take. So let's see what happens if we approach that and if we get a little bit of turnaround.
let's
we're not
get
buying it
down there
blind.
first.
Yeah,
you
we're
know
not
what I
buying it blind.
mean?
Oh, we're a stone's throw away,
Because
right? It's
a
not that far.
5-point gap between 127 and the 200-day moving average might not seem like a lot until you get rocked on Eli Lilly by 15 points.
Yep.
Yeah.
So like, let's just like for it's just going to take a little bit of time.
It's just going to take some time. It's going to take some time, and it's another one of those that have been riding the 9. So at the very least, if we're done pulling back,
another riding the 9.
Yeah, if we're done pulling back, get back above it, right? And
say the exact same thing on utilities we've been saying on some of these other sectors. Until that changes, it's not going to change for us.
I think it's just a good practice. Don't fight that, right?
Yeah, that is sector roundup there, T.
Love it, guys. So much out there, obviously, happening in the markets in the last week. Going by it sector by sector by sector really helps us understand what the underlying dynamics are beneath the S&P 500. That was a fantastic conversation. Appreciate it as always. We're going to transition into our last segment immediately. There's a couple of stocks in the news here today, but nothing too significant. Zoom, it looks like they're going to be losing a deal on a merger that they were going to be taking a little bit earlier in the year. That stock is under pressure, continues to stay under pressure. Jefferies had a decent earnings report. The chart looks good, but we're good on stock news. If you do want to get the most important stock news stories of the day, by the way, just subscribe to the Huddle. I do them every day on the podcast. We write them up on the website, tackletrading.com. Go find the Huddle, subscribe on your favorite podcasting apps, and we will get you those stories.
For sure. It's a good addition to your end of the day routine. It's a real good listen. And let's be honest, who doesn't want to, throw Tim in the background when you're getting ready for your afternoon nap or something?
Hey, right? I could put you to sleep if I wanted to, Frankie, but hopefully
you've got a voice.
I agree. He does have the voice.
I agree.
Yeah. It's good stuff though. If you haven't checked it out, I'm notoriously, I just keep enough news to not be lost, right? And Tim, between Tim and Matt, I really can just do my own thing and still be aware of what's going on in the world around me, so I can look at more charts, which is what I want to be doing. So give it a listen if you haven't yet. I think you will enjoy it. You do a great job with that, T-Dog.
I appreciate that feedback more than you know, because that's the whole design. People who don't want to dig into the news for hours, I'll get them to them in less than 10 minutes. So that's awesome, Frank. Appreciate that. Let's get into one last thing before we go to Frank's charts, though. I did forget Bitcoin, Matt. We have to look at the chart on Bitcoin today. If it was not doing what it's doing, I wouldn't say that, but it is firing off here today. Improvement. Matt, anything on the chart you want to highlight?
No, because I was eating my breakfast.
You go back on mute. You eat that bagel.
My wife brought me a wonderful, wonderful breakfast, and I was starving, so I took a bite. And Tim's like, "Hey, can we bring back the Bitcoin?" I'm like, "Dude, dang it!
Come on,
okay, can I just have a bite?" No, I kid. I think you got to love this. What's happening on Bitcoin? Not only just Bitcoin, but Ethereum as well. And we talked about this earlier this week. The impressive nature is not just today. I think it's very impressive that crypto did not get caught up in the bond versus tech versus growth versus economic sensitive versus the 3 or 4 different macro debates we're having as market participants. Bitcoin didn't participate in that.
Yeah. And then you add kind of the gobbling up of the China news from last week, right? The way that we defended ourselves.
Are you kidding me? A major country coming out and saying we're going to ban this? And it's like, okay, we'll take your market share if you don't want China. That's fine.
Yeah, you stick support, you break resistance.
I think it's impressive. It is definitely impressive. So. But from a short-term trading perspective, I still think you're in the day trading environment.
I would agree.
I think so as well. Yeah. It needs to develop outside of these daily pivot points before you have some kind of directional trade on the swing trade, position trade, all those timeframes. But you have to love what's happening if you're a crypto bull. You have to. It's a very exciting support.
No. You have every right in the world to scoreboard this week.
Yeah, this one's
100%.
Relative against the market too. Great week for crypto.
100%.
All right, let's move into our last segment. Frankie cannot make the people wait anymore. Frank's charts. And honestly, at this point, Frank, I don't even know if it needs an introduction. You find the best charts that you can out there in the market. You share them with us. What do you got here today for us?
Well, we talked about a lot of them, but there's a few still on that we missed. I want to just take a quick second. You just, went right over Jefferies, JEF. That's a really interesting little breakout candidate with the added bonus of earnings are behind us. They had their earnings It was a beat. I don't know how great of a beat it was. I did not look into it, but what I did look into is the price reaction and the chart itself. So if I'm looking for something, and believe me, I'm gonna, you guys know me, earnings are going to drive me nuts for the next 3 weeks. So anything that's got earnings behind it and clean technicals is definitely going to catch my attention, of course, in the financial space. So no reason to go too crazy on that one, but I do think that is at least watch list worthy as we're going forward. Let's see. Let's talk a little bit about apps. I did just a quick little Twitter video and Frank's charts yesterday on apps. Just see if anybody's on the same page with me here. If I'm on an island, we had the nice breakout, right? The head and shoulders broke above the 200, fired, snap back, Cody special into a doji yesterday, upward movement here today. Am I missing anything? Can I sign you guys up for a potential reentry, working our way back to that old resistance level? Then we've got some stuff at around 80, and then beyond that, well, we've got lots of room beyond that.
No, Frankie, I by the way, I saw your Frank's charts video yesterday. Definitely check out Tackle Trade's Twitter account, guys. Frank does such a wonderful job, and he does a video on there for Frank's charts every Thursday, and it's just an absolute wonderful addition. So definitely check out Frank's follow on Tackle Trading's Twitter account. Frank, just to kind of button this up, yeah, I mean, for any bullish trade that you're looking at from a retracement flag, you're identifying support, you always talk about, liking the quality of the zone, right?
Mm-hmm.
And when you're looking at the quality of the zone, and I'm talking about all these different types of catalysts that can identify as support, right? They're not support until confirmation. And that's why when you look at that zone, you're stacking. I've given Tim this analogy a lot. You're breaking one piece of wood versus two versus three versus four versus five. And I see a trend line. I see a cluster of old resistance over here, new support. I see the trend line coming up where you see my green line here. Look at that, hug that trend line. I see that 200-day moving average right there as well. And just for Tim, because I know he loves him some Fibonacci retracement action, I'm going to draw him a nice little Fibonacci retracement just so that he can really identify that Goldilocks opportunity where you're talking about. You see that over there? I just want to highlight that for everybody, Frankie. Just give me 1 second. Let me get that nice little pink box here just so everybody can see what percentage that is. Oh, no, now I still got the Fibonacci there. Okay, now we're good. Right there. See that? See that, Tim?
Mm-hmm.
Okay, so you're at the 200-day moving average. You're at the extended trend line. You're at a previous level of resistance you're at a 50% Fibonacci retracement. Tim, what do we call that? What do we call that?
I don't know why you're trying to ruin my mood. So
why do you call that? I'm just saying, what do we call that?
It is a Goldilocks retracement.
Goldilocks.
Yes.
That's what we call it. And so, yeah, Frankie, I'm right there with you on apps. I thought it was a wonderful video, and it caught my attention, certainly, because honestly, I wasn't looking at it before the video, and I was looking at it after the video, so thank you.
Well, good. It did its job.
It did its intended job.
Yeah, and a nice little, I mean, I was looking, throughout this week. I mean, I was, looking for the cheap risk trades, right?
Yeah.
That's a good risk to reward, but a good tight stop loss. I'm, notoriously, I like to give. I'm pretty wide with stop losses as a general rule, but when volatility picks up, I'm not afraid to get, a little, day by day, if you will.
I got a question for you.
And very quickly, though, just let me finish the thought on the intraday analysis. Very quickly, kind of going back to the consistency, look at the support level build in that we talked about on the daily. Look at that come in on the intraday analysis, over multiple days. Look at the old resistance at $70, $70, $70. Very easy to trigger off of, just like the consistency of your apps pick there, Frankie.
Mm-hmm.
Yeah. What you got, T?
Simple. The daily chart looks gorgeous. The intraday chart is building. Do you have any concern on the weekly? That's the only thing. The longer term chart is not as clean.
Certainly
there
not.
may not be any concern there for a swing trade. I'm just wondering what you think about that.
If there is, go look at one of those multiple time frame darlings I gave you in the energy conversation.
Mm-hmm. Yeah.
Yeah. And so, I mean, there is stuff there. I guess, I'm kind of thinking we try to work to 80 and then we'll deal with the other stuff, right?
Gotcha.
We'll work to this recent swing high, because so it is more of a swing trade. Let's try to get to the swing high. That shouldn't be too tall a task. And then if we can push through, let's get to 80, then we'll start figuring out what we got to do if we're still around with the other stuff, because that's where the other stuff really starts to, there's lots of it, right? 90,
Well,
92.50, but that's a long ways away.
And can I just mention one thing here very quickly?
Absolutely.
When you looked at the initial reaction to your weekly chart,
Mhm.
you're looking at that lower level of resistance here and here. When you're just looking at your bird's eye, when you draw your trend line, you see that little bit different, don't you?
That's a good point. Yeah, I do see it differently now. Yeah.
Because the momentum is shifting here. And so I see your concern, but I think the overall, and again, look at your resistance, look how it lines up. I mean, even if I did reversal analysis here, that is a reversal support catalyst where your downtrend now becomes an uptrend resistance support level.
One of my favorites, personally.
Honestly, it actually adds to the argument, not takes away from it.
I'm glad you guys answered that then. I appreciate that. Very good. All right. Apps on the list for watch list. What do you got next?
All right. So I told Matt I was going to make him wait because I wanted to hear his
He
reaction
did.
live.
He wouldn't tell me. I begged him.
somebody.
He wouldn't tell me.
And the time has come, Maddie. It is CBRE Group.
CBRE. Well, if you like cup and handles that could be in a textbook, you're going to like this one against $100. I'll tell you that right now, Frankie. I mean, I'm glad you waited. I am glad you waited. Look at this. Cup, handle, breakout. Now, what does that breakout zone represent? And why'd Coach Frank save it for me? Why'd he save it for me? Because he knows I like clean charts. That's number one. Right?
True.
Fresh and clean, Frankie. Fresh and clean.
Fresh and clean.
Number two, he knows I like consistency and analysis. Cup, handle, breakout. That's number two. The consistency doesn't stop. Look at the consistency on the 50-day. On the 50-day, in the cup, in the handle. We're not done at $100. That stands out to me, Frankie. It just stands out to me. And then you take a look at the weekly chart and you see that cup and handle a little tighter. Man, that is Marty wanting to jump on the trampoline and see how high he can go. That's Marty on the trampoline getting a rocket from old SpaceX, sending him to perhaps outer space. I like this, Frankie, absolutely. Now, again, this is CBRE Group and not Zoom in 2020 on the Dirty 60 Money list.
Right.
But you get the point, right? It's a wonderful breakout on multiple time frames. Yes, it's a yes for me, Frankie.
So I figured it was. It pretty much had everything that Maddie likes. So that's why I made him hit away. I mean, I think everyone's going to like that chart if you like technical analysis, right?
Yeah.
It's hard not to.
It'd be hard to veto that chart. I would love to.
I can't wait. I can't wait till somebody vetoes. I can't wait. I can't wait. I can't wait. Just do it. It's like Doc Holliday said one time. Just say when.
Yeah.
Just say when.
I'm your Huckleberry. All right.
So T, anything you would like to add?
No, it's clean, fresh and clean.
That one. So fresh and clean. All right. I am all right with that. We talked a lot about energy stocks. There are a lot out there. You've got plenty of choices. One that I thought was interesting, especially from a risk to reward perspective, Mandy, was OVV. Little smaller cat. They're not tiny by any means, but they've got a very clean breakout. They have some old resistance as we get into the $40 range. We do have that was an old support zone, going back a few years, a pivot in days gone by. But I did feel
that's like $4 though.
Exactly.
That's a lot of money to be made away.
That's a long, especially at this price tag. We're going to close that 200 weekly as you've got going on right there. So that's definitely a positive. I always like when the first test of the 200 weekly is what I expect it to be, which is a failure, right? And that's what we had back in May. I expect that is a hard fight to win. And I think we do need to lose it. We don't have to lose it as bad as they did by any means, and I think it makes sense that we lose that battle when we take that second run and push through it. That's where I develop some confidence. So I feel like the risk to reward is very appealing in obviously a space that, I think we all like. We are going to have plenty of options in there. It doesn't have to be OVV, but they did stand out to me from a risk to reward, a way I could build the trade type of point of view.
Mhm.
Yeah, I there's nothing I can say to discount what you are, analyzing here on OVV. You got to like the short-term momentum. I see very consistent analysis between your pivot relationships. You see from the 200-day moving average up to 30, back down to the 20. Dry back up. Excuse me, dry back up in price. High base scenario. Wait for the 9 EMA to catch up to it. Frankie, the simple reality though is you're talking about a space that has a lot of good charts in it.
Lots of options. I mean,
That's
it really
right,
will come down to, and for me, what it'll come down to is what's the risk to reward on the swing trade, right? That's not what, I mean, everyone's going to take that into consideration, of course.
Well, and honestly, Frankie, if you're looking at the 34 break here and your target is 38, I mean, you're talking $4 against 34. That's a really decent target there, and for me, it's a realistic target. I do like the analysis you gave above the 200, though. That changes the perspective from a technician's point of view. There is no doubt about that. It's just a matter, does it stand out against some of its counterparts?
Exactly, and that's going to be an interesting. That one's going to take some time for us, right?
Oh, it's going to be a fun debate
because there's a ton of great entries. There's going to be solid risk to reward. I'm going to be looking for which one gives me the best. If someone gives me 3.2 instead of 3.1, that's probably the route I'm going.
I can't wait for every one of those coaches at Tackle Training for to obviously know that they are pitching their own book in their stocks in the energy space. But it's split hair analysis. There's a lot of quality technical setups. To me, a lot of it couples on crude oil actually showing a little bit of bump above 75
would be very helpful.
Yeah, it's in the zone where if you do see that, you couple a crude breakout with all these setups confirming, it has potential to be a good energy week. But again, we got to see it first.
We got to see it first. Absolutely, we got to see it first. Maybe on the bearish side, old charge point, CHPT.
Saw these guys this morning,
breaking down. I mean, they've been doing
support
for a few weeks now. Right, got the breakdown, got the momentum, got the falling moving averages on the
list last week.
They were on the list last week. I think they were on the list the week.
It might have been on the list week 4.
We were just waiting for the break. We finally got it here today. I mean, who knows for sure? But you look at these guys, and nothing really stands out until 16 to me. Or approximately
that's me too.
16. Yeah. So we've still got a pretty nice window that I think we can work with as we go into next week.
I agree. You got a little chop at 17 and a half, but when you're talking about support, that would be 16 for me as well. In charge put, you got to start with the quality of the support level. It just blasted 20 here today. It had tested wickety wick a couple times over the last 6 months. That's a break. Certainly interesting from a shortable scenario, Frankie.
Yeah, I Tim, anything you'd add? I mean, we've talked about that one before, the three of us. So not a whole lot of discussion that we would probably be able to add to it.
It's one of my top 3 short candidates for the weekend.
Yeah, I would agree with that. It is definitely very appealing. Let's maybe look at a couple of more here.
Last 2, Frankie.
Yep. When I say couple, I mean like 4 or 5.
I know.
Right? You're not supposed to call me out on it. All right, let's talk CRE. Let's talk about the regional banks, KRE. There are going to be, again, lots of options if you are interested in this space. We'll just look at the ETF because, well, that's going to be a good illustration of where we are overall within the space. Really, when we think about the sector as a whole, and then this industry within the sector, it really leads me to believe that we are going to, if we can get that upward movement and continue it, in the case of KRE, we're definitely ahead of schedule, I would argue, in the regional banks. Working back into this old 72 resistance zone seems like a very likely situation to me on CRE. So whether or not I'm using CRE itself, I think I liked NYCB the best within that space, but I did like the pullback flag that's already hit the entry. Now we're putting in breakout analysis on it. So it's one of those, well, selfishly, I'm glad it did that, but at the same time, I kind of wish it didn't, because that was the one I liked the most. But whether it's these guys, Keys, RF, ASB, I mean, there are an absolute ton within this space. I think you could make a really, really compelling argument on ASB if we're looking at an individual stock, banking stock. Broke out, nailed it all week long, super consistent on that intraday. We do have, much like CRE, we're going to have that old overhead around 23 and a quarter on ASB. So risk to reward should be in our favor within a lot of these regional banks.
Banks are interesting.
Awesome.
I got to tell you, I'm focused on financials during the month of October. Those regional ones are looking like they're shaping up. I just have some open questions about where the best areas of the market are. You guys are showing me so many great charts. It's a take your pick kind of area this week as we're heading into next week for
sure.
picks
And we'll definitely have
kind
some others that are very interesting. I have no doubt in the stock and option report this week. So looking forward to our meeting. But it was fun as always. Love talking charts with you guys and with the team.
Frankie.
So thank you for having me, everybody. See you on Friday.
Matt, one thing, if you could be so kind as I wrap up the show, just send us out for the entire weekend. I dropped you a link in the Zoom chat. If you can head there real quick, it's something that I wanted to promote here just today. You know, a couple of years ago, I wrote and I did a video on a concept called Start With Why. One of my favorite books I've read in the last 10 years is from Simon Sinek. It's a mindset book called Start With Why. If you've never picked it up, wonderful read over the weekend. You could probably digest that book in just a couple of days or within a week or two, depending on how much time you have to dedicate to some extra reading. This blog here, I'm going to drop it in the link for the chat. And if you're out there in your Team Taco and you've never gone through it, spend some time this weekend going through it. And the reason where this inspiration came from, Matt, it's first day of October. We're heading into the fourth quarter. It's a good time when you have those just markers to reassess your goals, reassess where you are, reassess kind of what I want to accomplish before the end of 2021 here. It's been an incredible 9 months in the market up until this point. We've got all kinds of opportunities heading into the back half of the year. Guys, I want you to go through this content, go through this blog, get the PDF within the blog, and make it a homework assignment over the weekend. It's a wonderful thing. It's a free blog. I'll drop it in the chat. For those of you in the one-on-one coaching program, Monday night, I'm going to be hosting our mastermind group on Monday, 8:30 p.m. Eastern. It's on the events page at Tackle Trading. Come and join me. This will be the nature of the conversation we have during the coaching mastermind group on Monday as well. And yes, that orange button right there is where you can download the ebook. Matt, this is one I think is very valuable if people have not gone through it. I just wanted to highlight it because it was on my mind here today. Any final thoughts for the team out there for the weekend as we head out?
You know, the Start With Why book is a wonderful, wonderful read. Highly recommend. And I do feel sometimes, on a Friday where all we did was talk charts. 99% of our time we talk is analysis, charts, trading. But I feel like mindset is as important as anything else, quite frankly. Mm-hmm. And honestly, even in the halftime report, I would talk more about mindset. But honestly, we're here to analyze, right? Mm-hmm. But whenever I've done mentoring or coaching in my life, it's always the first question I ask somebody. Well, why do you want to become a trader? Well, I want to make money. Well, there's 1,000,001 ways to make money. Like, we live in the world of opportunity. It's amazing how much opportunity you say no to every day that you just simply don't even understand that it literally exists in that moment. But why trading? Why investing? There's easier ways to make money, I would say, in the world. There's less stressful ways to make money in the world, I would say. So why trading? Why investing? Why the second oldest profession in the world? Why? Well, it can't be about money. It's typically what money provides: time, lifestyle, spending more time with family, giving back to communities, giving back to people, helping people out. Those are all whys. And so, I would highly recommend reading the book, Start With Why. There's a great YouTube TED Talk on it, on Start With Why. And Tim, I feel like a few years ago, you took this concept of Start With Why and you wrapped it around the concepts towards trading and investing, and you tailored it towards trading and investing, and you did just such a beautiful job in doing so. And so definitely check out Start with Why. Download the ebook on what Tim did on Start with Why. Check out the right there. See, I got another arrow. I love these
You
arrows.
love that pen.
Like, you can go here.
You
can
love
go
it.
here. We can go over there.
Yeah,
Like, you
that
see
epic
all
pen
this?
is your
This is
why.
a dangerous thing. This is a dangerous ball game we're playing here. But no, definitely check out Start with Why. And Tim, you did a great job, no doubt about that.
I
And
appreciate
if you want to continue the type of mindset from a trader's perspective, get over there for pro members. Get over there for the System Development 101. That is a fantastic 101 for the pro members as well. If you haven't watched System Development 101, I would highly encourage that one
I
as
would
well.
absolutely
along
encourage
with
it.
this one.
Fantastic. Guys, drop the link. Go and grab the ebook and go through the blog. I know that you're going to get some value out of it. I know when it's good, and this one is a good one for you guys if you've not done it yet. All right, guys. That's it for our show here this week. As always, appreciate you guys. Team Tackle, you were on fire throughout the week. Frank, great job today. Matt, thank you for the analysis each and every day. We'll be back next Monday.